And we're back with our final end of day post wave report for Thursday, November the 3rd, 2022. And I just wanted to just chat with you real quick. I did put a notification earlier today into the trading room, and I indicated that I was liquidating all open positions and going flat, going into the weekend, being flat. I think we have one more final batch of reports coming out for Friday morning. I think like jobless claims or something. I believe that the markets are gearing up for a spectacular move. Not quite sure which direction the market is going to choose at this time, but I know it's going to be a big one. We just came off of a major algo shift. Even to this day, after all the volatility we've seen this week, the S&P 500 and the NASDAQ 100 are still unchanged. They're still diverging from the rest of the indices. The Russell and the Dow seem to be moving together, and the S&P and the NASDAQ seem to be moving together. It's weird. I cannot recall a time where this has happened before. The only similar circumstance that I can gather is back in '07, where all the indices were hitting new all-time highs with the exception of the NASDAQ. And then in '08, you know what happened. So now we're seeing a similar circumstance. Now I know we had reallocation and these indices, taking out securities, adding new securities. So the rebalancing may have a lot to do with it. And as you know, if a portfolio structure leans more heavily on a handful of stocks, then if those 2, 3, 4, 5 stocks are having big moves, then it can affect the rest of the index. So, like for an example, if the S&P 500 has 500 securities, and the top 5 holdings out of the 500 securities are the heaviest weighted and majority of the index, then it doesn't matter what the other 400 stocks are doing. These stocks are going to cause the indices to act a certain way. So the rebalancing, I think, has a little bit to do with it, but for the most part, there's a lot of other factors as well. So with all that being said, I do not believe that that's going to be the main factor that causes the markets to move the way they're going to move. I do believe that there is a rebalancing and a restructuring because of the algo shift. There's big inflows and outflows of money trails all over the place, and just a bunch of news flying everywhere. So, with that being said, I believe that it's better to let the dust settle tomorrow, Friday. It's Take Back Friday. Let the dust settle and see if we can get some kind of alignment and agreement in these indices, because right now it's just not there. The indices don't know what they want to do. They it's like not knowing what you want to be when you grow up, kind of thing. So, with that being said, I'm watching. I'm watching and waiting. Now, even with that being said, I'm still watching, meaning that if anything weird starts to take place, I will be taking a note of it. But right now, what I see, just what the algos are suggesting, is that the risk right now is to the downside, not the upside. All right. I repeat, the risk in the indices that I'm seeing right now is definitely to the downside, not an upside surprise. Any kind of upward movement, it will only be a momentum play in a bear market rally that will result and end with the markets falling and falling hard. I believe that the markets are about to, like I said, do something quite spectacular. I think the move is going to be fast and fierce. And I believe right now it's looking like it's going to be definitely to the downside. I think the bear market is about to relock itself back in, and it's choosing a direction. and that direction is to the downside. Now, they've been able to stabilize the market, if you will. They've been able to stabilize it somewhat. We do have elections coming up, so they're not allowing the market to fall apart just yet. But the word on the street is that, um, Democrats are bad for the market. So if Democrats are going to take the majority, it's going to be bad for stocks, and stocks are going to fall apart. That's kind of the ritual. Wall Street says Democrats are bearish, Republicans are bullish, and I think that's what we're looking at right now. We do have precedents for this too, looking at past elections. As soon as it was going to be, a fact that Trump was going to, win, the Dow ceased falling 1,000 points and rallied 1,000 points. So we got to take all of that into account when we're doing our analysis. We can't overlook or try to downplay the impact that elections have on the market. And there's a lot of factors that go into that, but we still can't ignore the impact. The impact does exist, so we have to acknowledge it. So that's all I'm saying, is we have to acknowledge the impact that would have. Okay, so yeah, things are wild and crazy. Yeah, most definitely. But I think the resolve that people have for their biases and their positions is what's keeping the markets from totally falling apart at the moment. I believe that if it wasn't for the upcoming elections, that the markets would have already fallen apart. We'd be scraping the market up off the floor right now. But because of the election, for the sake of the election that's coming, that has not happened. I think they're waiting until after the election. So I think the markets may just kind of drift along until the end of the year. But once January comes, I think that's when the bear comes out of hibernation, and he's going to smack these markets around to the downside. I think that's where the evidence is pointing right now. That's the direction of the evidence. And again, we can only go where the evidence leads us. You know what I mean? So we can't try to force our opinions on the market. The market's going to do what the market is going to do. And it doesn't matter what you and I think or what you and I want it to do. We trade what we see and not what we think, because our thoughts can be wrong. And we don't want to be wrong. We want to be right. So we have to try not to force our bias on the market. Let the market decide what the market wants to do, and then we'll just take up positions and trade in the direction of the prevailing trend of the market. It's not hard. All right. It just takes discipline. So that's what we are going to do over here at PulseWave Trading. The rest of the world can go ahead and be cannon fodder all it wants. It has nothing to do with me. I'm going to do what I do and let them do what it is that they do. And I suggest that everyone else consider that as well. It will go well with you if you do consider it. All right, so that's what I'm doing. I'm watching right now. I think that Um, the risk is to the downside. If you take a look at how the markets moved this week, the S&P and the Nasdaq were the last holdouts coming into Thursday. And as far as bona fide sell signals, you don't really have it. You have one in the Dow, yes, you do. You have a sell signal there, but the S&P is not showing that. It's not giving you that. Looking at the Nasdaq finally is saying, okay, fine, sell me, and of course the Russell is saying sell me. But the weird part is that the Nasdaq and the um, S&P are saying, okay, go ahead and you know do what you do, but we still think that the market is going to rally soon after this this sell off or this pullback, however you want to call it. So it's a mixed bag right now. Yes, the momentum is negative. It's bearish. The momentum in the Dow and the S&P is bearish. The momentum in the Nasdaq and the Russell is bearish, but they've been moving weird. And then when you look at the metals, you look at gold. All right, you got a mix. All right, gold and silver are neutral. All right, it's neutral, meaning that it's both. It's consolidated, but it's both bullish and bearish because it's consolidated. You look at silver. Silver is both bullish and yet also bearish because there's a tug of war going on between them. So you still got most of these securities in bear markets. So any rallies you see are going to be bear market rallies. All right. So don't have a lot to go on except for that. So we're going to wait and we're going to see what happens. I think that we probably got a little bit of selling off to do, and then we may get a little bonus rally. I don't know if you call it a Christmas rally. You can call it a Christmas rally. I don't know what you would call it. I don't see it being that serious myself. So, but yet again, we'll see. I don't know. I don't know what to tell you on that. Anything's possible. We'll just have to watch and see and let the market determine what it wants to do. And then we will have our answers. But not until the market has chosen a direction. That part I cannot stress enough. Right now, you're consolidated in the majority of these markets, and they're in bear markets. Stocks are in a bear market, but some of them are showing neutral positions within that down cycle, which means that they can bounce around a little bit and chop people up. Okay. So I just want to put that out there. I just want to chat with you this evening, just to give you my take on what's been happening, just to think a little bit of what's been happening. Like I say, going flat, not looking to do anything. Those who have followed me for years, normally I do not initiate new positions on a Friday or over the weekend unless we are up in profit because the market's been breaking out all week and we're just loving life and we're just moving stops, and we may move stops and then just hold over the weekend because it doesn't matter. But when you're looking at consolidation and choppy markets, when they're moving like that, it's always best to keep your powder dry. It's always best that you know if the market isn't doing anything, you break even for the week or whatever, just stand aside, step aside for a minute. Let Sunday come. Let Friday's market activity do what it's going to do. Let the market close, because the close on Friday is always important. All right, and then that kind of sets up the whole thing for Sunday evening's market. So when Sunday evening comes, we'll definitely know what we're going to do prior to that, because tomorrow's close is going to tell us what to look for by the opening on Sunday. So Sunday, when the 5 o'clock hour rolls around for forex and the 6 o'clock hour for the futures, we'll know exactly what we're going to be doing, and we will have our game plan. And I think we'll see. So it is what it is. Yeah, I'm gonna be looking at a lot of things. We'll see. I think tomorrow's close is probably gonna be one of the more significant closes of the year. And I think part of that is because of the FOMC that we had this week, for one thing. So I think that's going to be a big part of it. And we're definitely going to want to see that. We're definitely going to want to see how the markets close tomorrow. All right, folks, with that being said, you know what it is. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And everyone have a great weekend. Peace.